Hey, good afternoon, everyone. This is Neil with Simpler Futures, post-market update, Wednesday, January the 4th. Okay, so what you're looking at is a daily chart of the E-mini S&P futures. And what I want to draw your attention to is this upper region first, I guess, that we traded in, from mid-November until the mid-December, at which time price broke down away from this balance. And if you remember, balance up there was about 4,000. And we broke down into, now what I'll draw your attention to is this area here that we've been talking about in the last couple of videos. And that is this area starting on the 16th of December to present, and a little higher, a little lower, but let's look at that area right here, all of that region of trade right there. We've been talking about it in the last couple of videos up until this last quarterly, expiration, etc. And here's what it looks like on a market profile and histogram. So here we go. All right. This is a profile of exactly that range, the 16th through even today, right? And what you see here is a pretty well-rounded and certainly point-specific kind of, distribution that really zeroes in on the main price and over under, that which we've been discussing, and that's that 3860 you can see right there. A little above it, 3880 is value area high of this region, and a little below it at 3830 is the value area low. If you remember, that 60 price is the one that's married to the SPX 35, which was the that big open interest strike that we identified on the call side of the last quarterly OPEX. So here we are still, right? And this means that what I would describe this as like all roads lead to this, until they don't, of course, and that will come. But when that is, of course, that's part of the discussion. And which direction might that be is also part of the discussion. I have an idea for this. I will leave you with a little idea, a little homework. Maybe you can look at your calendar for next week. Go to forexfactory.com, look at the calendar for next week, and you'll find there that there's more than a difference, enough to make a difference anyway, for next week in terms of a potential catalyst that can be the event that causes repricing away from this current tightly wound and coiling effect of this building of potential energy here. That and by the way, the longer something builds and sits sideways like this and builds energy at, think about this, like almost 2 million contracts a day, and it trades this way, from mid-December until present. That's a lot. That's a lot of energy for a buyer for every seller, a seller for every buyer, and there's a lot of potential for one of those two parties to be caught offside when this thing does move away from a current, balance. And at least we know what balance is. 1. 2, we know not to be in a hurry, because clearly the market is not in a hurry. We know 3, that as long as this is the case, and it is still right now, then we want to be very careful with, thinking that I've got this figured out. Every time it starts to move, we'll get long, it's going to be the big one, or get short, it's going to be the big one. There's no big one here. This is reversion to the mean. This is back to the middle type trade. This is fade the edges back to back to balance type trade. It is until it isn't, and that's not right now. I mean, whatever this event is going to be that is going to cause this repricing, which will be the price discovery to a new balance at that time. Clearly it's not right now because we had Fed minutes today, and that was absolutely not enough. All that did was bring it right back to 60, from about 90 right back to 60. And, there is potentially enough next week, though, right? And we'll talk more about that when I'm with you again on Monday.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me